Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn these PPT strategies and you simply profit for life. Let's get into the action today on this Wednesday, February 5th, 2014. Markets are basically flat on the day. We have the S&P 500 down about 1.5 points. Dow is up 13 points. NASDAQ is down 12. So really all indices floating around the flat line. Now, what does this mean, guys? What exactly on earth is this telling us? Because yesterday we saw a little bit of an update that was following Monday's mega decline. Today, what you have to note on the chart is very simple. Notice the low from Monday, the high from Tuesday. Notice today's price action is in between that whole range. So basically what I'm saying to you is you're watching to see which way the market breaks. All right? Do we break above yesterday's highs and close above there? In which case you should be bullish for the next couple days into the jobs report on Friday morning. If you break below and close below the lows from Monday, you should be bearish and expect more downside. All right, right now we're hovering in the upper ranges, so you could make a case that, you're looking to see if it can break to the upside, which would be bullish for the markets. But really, as long as you remain between these two up and down levels, the low from Monday and the high from Tuesday, you would want to be more neutral than anything. I'm neutral with a slight positive bias overall. Just the nature of the beast right now is certain stocks are hitting major levels. And a lot of stocks are bouncing out there too, which is kind of interesting. We see Amazon up today, Google's up today, Apple's up today. A lot of players out there, even JP Morgan, are trading higher today. So if you look at certain stocks, like a couple stocks I want to bring to your attention, Boeing today, take a look at this. And again, you can see I day traded it a little bit among other things. But notice this support area. All right, so you have this pivot high right here, which you touched. You have this gap fill right here that you're through. Sharp sell-off on this 200 MA coming up underneath. So my thesis to you is that I think the markets don't have, even if we were to see some more selling, it should be limited in the short run until we get a bounce just based on some of these charts. All right, and you can do the same thing with other charts out there. I mean, you can see FedEx. Notice FedEx. You see this gap fill right here. All right, so you have a major level on FedEx right there around the 127.30 level, which again, you've had a sharp sell-off. And again, ultimately, I am bearish for the longer term. I think the markets are going to get a bounce over the next, week or so. And once we get a certain sort of bounce which fits criteria, then you're going to look for more downside, and you should get more downside, significant downside. But again, I think the key is you have to watch for the market to get bounces along the way, especially when you're this close to the highs. You will have an inkling of a buy the dip mentality still reemerging. And I think that is something that a lot of people are forgetting here as they're getting more and more bearish. And I think the more bearish people get, the more likely a bounce is coming into play. So just a couple things to note here. I have a couple other stocks I want to point out to you. One is Target, TGT, potential bottoming tail on an oversold chart. Look at this chart so far this year, folks, from $63 to $55. And that's after it was off its highs from 2013 of 73. But the point is, again, nice little potential low here. Extended down move due for a bounce. And there's a lot of charts out there like this. I mean, a lot. I mean, even Amazon. And Amazon had bad earnings, and I think ultimately it's got to go to the 200. But you are into this level on Amazon, which is a pretty significant level, and you can see the bounce starting to come in today. Then you have gap fill right below that as well. So see how many levels you have: 1, 2, and 3 levels just below current price. So could it go down a little bit more? Sure, it could. But eventually you got to get some sort of technical bounce here as so many of these major levels are coming into play. Okay, so I think those are very important little factors that we wanted to go over here. There's countless other charts that look like this, and I think that's important to recognize. So countless other charts, and it's not just these that I'm selecting. Even if we look, look at Chevron. Look at the drop on Chevron here. And those are former levels. But look at this fall from the 126 level to the 109 level. And then look at this level. There's a gap fill right here on Chevron, and I think this actually would be a great swing trading opportunity if it gets there. The 108.25 to 108.50 level, there's a gap fill from 2012 close to 2013, and if you fill that gap, essentially erasing all of 2013, I would expect buyers to step up on this stock, Chevron, absolutely. All right, so we'll keep an eye on that as well. It needs to come a little bit lower, but if it does, then I think you're looking at some pretty nice setups as a potential setup anyways on that chart. All right, another stock that's one of my favorites here, ANF. Why is ANF one of my favorites? Because they actually had good earnings, one of the few retailers to have good earnings. And the stock you can see right here had a major gap up and then slowly faded into the moving averages, bounced, slowly faded into this little pivot low right here. And then look at that little bounce you're getting today. It's still negative on the day, but it is coming off those lows. And I actually think over the coming days, assuming the markets start to bounce up a little bit, you're going to see more and more upside potential on ANF. So this is one of my favorites as a long swing trade as well. I have a bunch of charts out there. I entered a new position today in the Hot Charts and Alerts, which is inside the Research Center at InTheMoneyStocks.com. The Research Center, folks, is that's a vehicle or a service that the average investor or swing trader is going to want. I mean, that's where you're going to step up to the elite, getting the best signals, the best commentary, the best trade alerts for your portfolio. And I told everyone the fall was coming in January, literally days before, weeks before. I said, guys, it's going to happen. It's going to happen. Really starting from the beginning of January to about the 15th where it started. And people protected themselves. We loaded up on shorts and made a lot of money. And now I've started to accumulate some longs here over the past week or so, and I do believe those are going to pay some nice prices. And again, those are just short-term trades. We're going to be out in a few days to a week or so and move on to shorting again when the time is right. And that's what we want to do, is we just want to maximize our profit potential by going long and then going short and then going long. And I give out all the signals as does my business partner. So in any case, that's what we have going on there, folks. Some good stuff there for sure. Let me see if there's anything else on the radar here. I want to go back to the spiders and just kind of keep an eye on that. Yeah, spiders are kind of inching up again and just kind of floating here. This could be looked at as a little micro bullish consolidation as long as it stays above the moving averages. If you close below the moving averages, that's where trouble will emerge for this market into the end of the day. So again, if you're a home gamer watching at home and watching these charts, just watch these two moving averages on the 10-minute. If you get below them on a closing basis, then you could see some selling into the end of the day. As long as you stay above, I still would think that this looks to me like consolidation to the upside potential. And, interesting to see if we did pop into the end of the day, if we got above the highs from yesterday, and that could be very bullish in the short term. Okay, so that's what's going on there. What else do we have moving today? Well, there's a bunch. I mean, 3D Systems is a wild one, folks. I mean, huge action here on this chart. This chart gapped down. There were some great levels here of scalps, and the stock really just rotated back to the upside. Still down 11 on the day, but hit a low of 54.63 today, and is $10 higher than that. That's amazing. I mean, if you think about that type of move up, that is an absolute amazing thing. Okay? All right, what else do we see here? Let's scan through. We talked about Amazon. We talked about Google. Google was down over $10 earlier and is now up $10 on the day, $20 reversal there. A couple other things. Let me just go over the dollar and gold, and I want to talk about natural gas as well. Natural gas having a big move. Dollars is pausing today, not much. You still have a target level up here. The blue line in the 200 MA right up here is your target there. Gold is having a small update. Still consolidation on gold above the moving averages. Overall, you have to be positive on gold in the short term, although I am negative in the longer term. Silver's having a nice day today. One of the first days it's actually had a better day than gold in recent months, and that could be actually a good sign for the economy, maybe coming on the back of the ADP private sector jobs numbers this morning, which were a little stronger than the market expected, or feared. I should say feared. They weren't strong numbers, but after what we saw last week or last month with the jobs numbers, people really were fearful of a major, I repeat, major miss on jobs, and it didn't seem like the ADP number was doing that. All right, so nice move there. USO, let's take a look at oil. Oil's going sideways today. Let's bring up natural gas. Now, natural gas is key here, folks. Big reversal. Mega reversal here on natural gas. And what you can see here is it was actually above 28 pre-market, and it opened at 27 on the UNG, which is the Nat Gas ETF, and sold all the way down. This is a big wide range bar, folks. Big wide range bar. I gotta believe that this is putting in a top here, and the reason why I say that is because eventually this cold weather, as we get towards later in February into March, is going to subside, and that's one of the main driving forces, along with squeezing out shorts here, that's been going on. And what you're seeing here, notice how you made a pivot high, and this is actually something I used to analyze the stock market as well in early January, and to tell you guys that a fall was coming. All right, so basically what you saw is wide range bar to the upside and reversal. And then notice today we opened above or right at that high from about a week ago, and we reversed, and you're going to close lower than the high here, which is a very weak signal technically on this chart. All right, on a technical basis, that's a very weak signal. So, basically what I would say is any inside bar retrace 50%, you could probably short the UNG now. Nat Gas inventory is out tomorrow as well, which maybe gives us some volatility for a possible entry. But that is something to majorly watch there. All right. Boeing, guys, continues to reverse. Beautiful trade here. This I actually picked up in the research center today. This was the trade long trade that I picked up today. I saw the signals on the chart on the intraday. I want to show you guys this. Intraday, we were seeing some weakness earlier, and you can see the sell-off and reversal candle, and then sell-off. And notice how we made a lower low here, but we never closed below this low with the reversal candle. And then we came down here and just never got below that low and made a higher low. And right there is where I pulled the trigger on buying it as a swing trade, and I gave it out in the research center, as I said, as a swing trade. And we're already up about $2.10 on this trade to the long side. So these little things, I mean, if you can read the charts like this, you're in the driver's seat. I mean, it's just that simple, folks. You're in the driver's seat, you're in command, and you make money. All right, and again, it's what we do here, and will I be 100% accurate? No, of course not. No one is ever out there. But I will tell you this: that our members who trade correctly based off the PPT and the trades we give them make money nonstop. All right. You take 5 steps forward, 1 step back, 5 steps forward, 1 step back. It's just the nature of the beast, and that's exactly how you get ahead in life and make lots of money. So, nonetheless, come join us here at InTheMoneyStocks.com. Let's flip back to spiders here. Spiders, look at this, starting to move up just a little bit more. Again, this is your bogey. This is your break point right here from yesterday, right around the 175.80 level. So we still have a little ways to go to the upside to see if we break it today. If we do, that's going to be a very bullish signal for this market in the short term. My analysis is that the jobs number, everyone expects it to be horrible because of the weather and because the economy seems to be stinky. And I actually think that the more people saying it's going to be horrible, the more likely it comes out decent, especially since the government can fudge those numbers anyways. They're going to try to prop things up with the market doing what it's doing. So we'll see again how that plays out. Markets are coming back in a little bit. Let's see if we, again, just watch the 2 moving averages and the blue line here, and that should give you the rest of the bias for the rest of the day. Have a great afternoon, great evening, folks. Come join us here at InTheMoneyStocks.com.